The public is completely in the dark. They're missing out. The financial media is leading them astray by refusing to cover this, and instead nonstop coverage of fool's gold and no coverage of the real thing. They're missing what's going to be, I think, the biggest gold bull market in history. It's, as of now, it's the most unloved bull market in history. That will change. I don't think it's going to change at $3,000 gold. And I think we'll be there before the end of the month. We may be there before the end of next week. We get a lot of inflation numbers next week. I think they're going to be bad. So we'll see. I mean, gold could react negatively to that initially. We get CPI and a PPI. But I don't think $3,000 gold will do it, but maybe 4,000 or 5,000 will. And I think we're going to be there relatively soon. We could be there in 2025.
Gold returns have matched inflation rates historically. With inflation at 3 to 4% in 2024, gold prices are expected to climb further, making gold a good hedge against inflation. The gold price surge will likely continue due to economic uncertainty, geopolitical tensions, and monetary policy changes. With price targets for December 2025 between $3,260 and $3,400, investors need solid gold investment strategies to benefit from the market trends. Financial advisor and stockbroker Peter Schiff criticizes the Federal Reserve for failing to control inflation, arguing that higher-than-expected inflation should prompt rate hikes. According to him, financial media ignores gold's bull market, leading most retail investors to miss out. He expects gold to surge to $5,000 in 2025 as inflation worsens and central banks drive demand higher. During the stagflation of the 1970s, gold prices soared as investors flocked to tangible assets. If similar economic conditions prevail, gold could again serve as a hedge against eroding purchasing power and economic uncertainty. Based on fundamentals, Schiff notes that while central banks aggressively accumulate gold, American retail investors are selling their gold holdings to chase Bitcoin and ETFs, which he views as a major contrarian signal. Gold remains popular with retail investors, who, according to the World Gold Council, now hold 45,000 tons of the metal in gold bars and coins. That's around 22% of all the gold mined throughout history. In fact, retail ownership of gold is likely to be far higher than this. That's because physical gold is the only way to own gold these days. Concurrently, Schiff emphasizes that gold continues to hit record highs despite weak investor participation. He points out that gold miners are significantly undervalued, even as gold prices rise. Gold stocks have been trending higher since December. As they keep rising, the rally will begin to make headlines. Sellers will reverse course and become buyers chasing the returns. And that's when the bull market will pick up steam. Now, we present the clips of Peter Schiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I don't think people get inflation because they expect it. I think they expect inflation because they've got it. The government causes the inflation. The people just expect it to continue. But if the Fed really places a lot of weight on consumer expectations, and they keep talking about expectations have to stay well anchored at 2%. Well, clearly, we lost that anchor. I mean, we're drifting way away from 2% when expectations are 4.3%. What's the Fed going to do about that? I don't think they're going to do anything about it because they can't. Now, when this number came out, gold was at an all-time record high. It was up $30 on the day. It was trading just over 2,885. It sold off to just a little bit negative. Ended up closing down the day up about $8. So another record high close, record high weekly close. I mean, gold's going up, but it would have been up a lot more if we didn't get this bad inflation news. But again, bad inflation news is good for gold. It's not bad for gold, but the traders still react to this news. Whenever they see hotter than expected inflation, the reaction is, okay, the Fed is going to have to delay the rate cuts. Delaying the rate cuts is programmed in the algorithms. Anything that delays the rate cuts is good for the dollar and bad for gold. So the dollar rallied and gold sold off. But these algorithms are an example of garbage in, garbage out, because whoever's programming them doesn't understand what's going on. Yes, inflation is worse than expected because the Fed is behind the curve. In fact, they've surrendered in the inflation war. They're wrong. Higher inflation just shows that the Fed lost. The Fed is wrong, right? The Fed keeps saying inflation is going to go down, but the data keeps proving that it's going in the other direction. And what's significant is not that the Fed is going to delay the cuts. What's significant is that they're not hiking. they should be hiking. The data argues for higher interest rates, yet they won't raise rates. There's no way they're going to raise rates. And of course, when Powell's term is over, whoever Trump nominates, right, there's no way that guy's going to raise rates, right? Because, we need lower rates. And so inflation that is rising, that the Fed refuses to fight because it can't fight it, is bullish for gold. And it's bearish for the dollar. Now, gold's going to go up anyway because it's just going to keep on going up, right? The central banks are going to keep on buying. I mentioned on my gold, promotion that I did for Schiff Gold on Tuesday, and I haven't checked today, but as of when I checked on Tuesday, there wasn't a single day in 2025 where there was net inflows into GLD. Every day, as gold was making record highs and rallying, Americans were selling. And not only are they selling their ETFs, they're selling their physical gold. Redemptions are way up at Schiff Gold. That's what's keeping us going. I mean, yeah, some people are buying, but we're getting a lot of people selling. And I checked around. The same thing is happening with gold firms all around the country. Americans are selling their gold. I mean, what idiots, right? They should be buying, right? The central banks are buying. And I mentioned on that video that the delivery notices on the London Metal Exchange and the COMEX have shot up dramatically, meaning that people are taking delivery of these 100-ounce bars of gold. These are not mom and pop guys who are buying gold in 100-ounce bars. There's some sophisticated money alongside of central banks that are buying up all the gold they can get their hands on. Meanwhile, unsophisticated retail investors are selling their gold to buy Bitcoin or Bitcoin ETFs. Look, who do you think has got it right? These central banks or people who are trading on Robinhood app? So this is the best contrarian indicator I've ever seen, that you've got all the smart money buying and all the dumb money selling. You got to be loading the boat on gold. You got to be loading the boat on these gold stocks. I mean, yeah, I think, they're up now about 20% this year. Gold's up about 9%, 10%, but they still haven't gotten back to their highs from October of last year, even though gold is 3% or so above those highs.
Regarding recent economic data, Peter Schiff argues that the U.S. is heading deeper into stagflation. He criticizes the Federal Reserve for having no real plan to address stagflation and highlights that its policy tools are ineffective in such a scenario. Staff at the central bank umbrella group, the Bank for International Settlements, have warned of a global bout of stagflation if trade tariffs promised by soon-to-be U.S. President Donald Trump continue to drive up the dollar. Just days before Trump took office, the BIS published report said the world economy was on track for a soft landing, but it stressed growing uncertainty due to what it described as the new looming challenges. Experts like Schiff point out that the Fed's annual stress tests for banks ignore the possibility of stagflation, assuming that any recession will lead to lower interest rates and inflation. He warns that if inflation and interest rates rise while the economy weakens, major banks could fail, leading to a financial crisis. Let's get back to the interview.
All right. So we got a lot of economic data that came out throughout the week. And basically, all of this data taken collectively screams stagflation. I mean, that is where we are headed. In fact, that's where we've been, and we're just going to go deeper into it. But the significant thing about stagflation, other than the fact that it's the worst of both worlds, is that it's the one thing that the Federal Reserve has no contingency plan for. We went over this on a prior podcast. Jerome Powell was asked about it at a press conference. What's your plan for stagflation? And his response was, we're just going to hope we don't have it. Well, hoping is not a plan. But why is hoping all they've got? Because there is no plan. Stagflation is the one thing that their tools don't work with, right? Because they can either fight inflation or try to stimulate the economy. And the tools, are opposite. So if there's too much inflation, what do? Well, they raise interest rates or they do quantitative tightening, right? What do if the economy is weak, if the labor market is weak? They do the opposite of that. They cut interest rates and they do quantitative easing. Well, if you have a weak economy, rising unemployment, and rising inflation at the same time, the Fed's got nothing. You can't ease and tighten simultaneously. It's like you can't push and pull on the same thing because you go nowhere. So if the Fed gets stagflation, they're out of ammo. They got nothing, right? And in fact, earlier this week, I think maybe Thursday, not that early in the week, the Fed announced the results of its stress tests. It's every year they come out with these stress tests for the bank. And what do you know? The banks passed, right? They passed the stress. I think they passed them. But they did not test at all for stagflation. Right? The most adverse scenario, right? This is the worst possible thing the Fed could think of, right? The worst case scenario was a recession where stock market went down, like real estate market went down, but inflation went way down and interest rates went way down. So wait a minute. This is supposed to be the worst thing that can happen. And in the worst possible thing, interest rates go down and inflation comes down. Well, why is that bad? Isn't that what everybody wants? Like, we got all this debt. Everybody is loaded up with debt. And the Fed is saying, imagine how bad it's going to be if interest rates go down. Well, wait a minute. That's a relief. We all want interest rates to go down. Certainly Donald Trump wants interest rates to go down. So according to the Fed, this would be a disaster. This is such a horrible thing if interest rates go down and inflation comes down. But wait a minute. Don't we want inflation to come down? I mean, it's been so high for so long. Why would inflation coming down be part of the worst case scenario that the banks are testing for? Because the Fed just assumes that if we have a severe recession, well, we're going to get rewarded with low interest rates and low inflation. Well, I can think of a far more adverse scenario than that one. And that's the scenario where we have a recession, but interest rates go up and inflation goes up. And in fact, it's because inflation goes up that interest rates go up. Now, isn't that worse? Why doesn't the Fed test for that? Why doesn't the Fed say, okay, all you banks, I want you to run a stress test and imagine the stock market goes down, the real estate market goes down, but interest rates and inflation go up. So run a test for that. The reason that Powell is not asking the banks to do that test is he knows that every single major bank will fail. If we have that type of scenario where we have inflation and recession at the same time, and the result is rising, not falling interest rates, that's it. Everything comes crashing down. And so that's the reason there's no stress test for stagflation. That's the reason that the Fed has no plan for stagflation. But that's why we're going to have stagflation. You know, Murphy's got this law. Obviously, Powell doesn't know Murphy's law, but it says anything that can go wrong will go wrong. And stagflation is the worst thing that can go wrong. And it eventually will go wrong. In fact, it's probably already going wrong.
Commodity analysts who make long-term forecasts believe that the price of gold will generally keep rising in the next few decades as the demand for the precious metal increases. If inflation rises and economic conditions deteriorate, will mainstream investors shift their focus back to gold, or will they remain distracted by speculative assets like Bitcoin? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.